It's a new week and it's 10 a.m. So it's time for a fresh episode of Business Morning on Channels Television. You're welcome. I'm Ini John Mekwa, and good enough today, the MPC of the Central Bank of Nigeria starts the first meeting for the year today. By tomorrow, we're going to bring you details of their decision. And of course, we'll give a background conversation on that meeting. Of course, that'll be tomorrow at 1:30. But for today, we start with the oil prices, where it rose on worries about supply disruption and rising tension in Eastern Europe and the Middle East, which could make an already tight market even tighter, while OPEC and its allies continue to struggle to raise output. Brent crude futures rose 18 cents to $88.70 a barrel, reversing a 0.6% loss on Friday. U.S. West Texas Intermediate crude futures gained 72 cents to $85.86 a barrel, having fallen 0.5% on Friday, further fueling fears of supply disruption in Eastern Europe. The United States yesterday ordered the departure of family members of staff at its embassy in Ukraine, citing the continuing threat of military action from Russia. And back here in Nigeria, tax experts believe that Nigeria has one of the highest number of taxes in the world, with businesses subjected to pay 48 different taxes based on the findings of the 2020 World Bank report on ease of paying taxes. This and the introduction of new taxes through the 2021 Finance Bill has deepened the conversation of multiple taxation and the impact it's having on the country's real sector and economic output. Well, I put together this report to see what experts are saying about this. With a 6.4 trillion naira deficit in the 2022 budget, the federal government has indicated that apart from borrowing, tax would be a source of funding the appropriation bill, which has been tagged the budget of economic growth and sustainability. This is contained in the 2021 Finance Bill, which proposes key taxation, customs, excise, fiscal and other relevant laws, one of which is taxing all non-resident businesses that provide digital services to charge an additional 7.5%.
This will be introducing turnover tax on fair percentage of profits and from providing digital services to Nigerian customers. Such digital services include apps, high-frequency trading, electronic data storage, online adverts, as well as several others. And the rationale here is to enhance taxation of non-resident taxpayers.
While this has received positive reaction from some economists and other Nigerians, other adoptions in the bill have not had similar sentiment. For instance, the introduction of 10 naira excise duty for every litre of non-alcoholic carbonated drinks. The Nigerian Postal Services Bill, which requires licensees to contribute 2% of their annual turnover to the Universal Postal Service Fund.
New taxes are being frequently added to the myriad of taxes on the already overburdened private sector. This is in addition to the burden of dealing with the multiple agencies and taxes from FIRS and the state internal revenue services.
There are also taxes from the local government.
So there are many taxes which the local government is entitled to collect. Now, part of the problem is that the local government doesn't always publish, a list of these taxes. So people will go about unaware what they are.
These are the details captured in the 2022 World Bank reports on ease of paying taxes, indicating that there are 48 duties in the business space in Nigeria. Most prominent of them are companies' income tax, tertiary education tax, value-added tax, consumption tax, capital gains tax, stamp duties, personal income tax, withholding taxes, employee compensation fund contributions, and a whole lot more. For Mr. Onyeka Chiekeze, a manufacturer in the food processing sector, it's not an issue of multiple taxation, but the need to intentionally encourage businesses in the real sector.
What sort of encouragement can local manufacturers get in terms of taxes to allow, in terms of tax reduction or tax breaks rather, or pioneer taxes, to allow us to benefit more and employ more people. You know, that's the whole aim of the game. The unemployment situation in Nigeria is very bad, and if we continue to get taxed more, there's only so much there's so many people we can employ.
Economists have been challenging the government to shore up revenue and reduce the country's reliance on oil. But the question which stands out in the conversation is finding a balance between sourcing for revenue and making the business environment conducive and attractive to investors.
Instead of having 48 different taxes, we should try to follow the lead of the developed countries, streamline these taxes. We should be talking about the maximum of 10 different taxes. That way, compliance is easier. And in fact, compliance will be more attractive for companies because you don't have to worry about so many tax types. You just have a few that you really want to comply with. So it's going to encourage voluntary compliance.
Another aspect of the tax conversation in the face of current realities has been the need to deepen digital mechanism in the tax system to broaden the tax net instead of increasing the obligation on those already in the net. Ini John Mekwa, Channels Television News. That's right. The conversation around multiple taxation seems to be a continuous one that, of course, we will further talk about later in other episodes of the program. For this morning, let's look at mining, the mining sector, where Nigeria is endowed with over 40 different minerals spread across all the 36 states and the Federal Capital Territory. The three most mined minerals in 2022 in Nigeria were limestone, sand, and granites, and contributed about 80% of total production, as the mining sector grew at a double-digit rate in 2020. And take note of that, that was 2020, the year of the pandemic. However, the federal government has said that Nigeria lost $5 billion to gold smuggling alone, just gold, in 6 years. Now, what's Nigeria losing apart from this? And what attention should the sector get at this time? We have Oludele Folarin, Research Associate at the Center for the Study of the Economies of Africa, joining us from our Abuja studio to tell us more. Good to speak to you, Mr. Folarin. Good morning.
Good morning.
So we had a double-digit growth in the midst of the pandemic. That sounds good, but help us to understand. CSEA took up that research and got that double-digit growth. How did that happen? How did we arrive at that?
Okay, thank you very much. Last year, the National Bureau of Statistics, they released the report on mining in collaboration with Ministry of Mines and Steel Development. In the report, it was highlighted that the sector, solid minerals, grew by double digits, which was mainly contributed by two key sectors, which is limestones and sand. What we could observe is that prior to 2020, in 2019, mining of sand was less than 2 million tons, which rose to over 6 million tons in 2020, mainly coming from Lagos and Bayelsa State. We know these two states are coastal areas and they have potential for sand. And second is the limestone, and this tends to have a major triggering factor coming from three key states in Nigeria: Ogun State, Kogi State, and also Cross River State. And in each of these states, there was an increase, significant increase in extraction. And in two of the states, which is Kogi State and also Ogun State, we know that there is presence of two leading cement companies in Nigeria, which are the major actors. And also in Cross River State, we know that in 2016, the Cross River State governor obtained license for extraction of limestone in the state. And based on that, following collaboration with private sector, we observed significant extraction. That's why we could observe that increase in 2020. And also, we need to understand that out of the 7 key solid minerals highlighted in the 2016 solid minerals roadmap, 6 out of the 7 sector experience increase, and this could also trigger that government policy is responsible for the increase we are observing in this sector. Thank you very
Okay.
much.
All right. Sounds good. We'd like to explore that government policy. But first, we also have the issue like, I think it was in Plateau State, we have the issue of insecurity at the mining sites where some people have just been killed. You know, so we have the issue of smuggling. We have the issue of insecurity at the sites. And of course, this means that that sector has the potential to record even more growth than what it has recorded, impressive as it may sound.
Yes, you are very much correct about the insecurity. And what I would say is not only mining sector that is being hampered by the insecurity. We have agriculture and this stuff. And also the issue of the insecurity and also the illegal mining appears to be more prominent in the mining sector, which has also been one of the concerns by the industry actors to look for how can we find lasting solutions to illegal mining, and which is one of the reasons why there was creation of artisan and small mining scale department in 2016 in a bid to curb this illegal mining, because it is observed that the illegal mining is mostly common by small-scale miners, and because of the cost of obtaining a license. And I think based on the observation, this clearly shows that if the illegal mining could be addressed by trying to form a cooperative among the small-scale farming, small-scale miners, that could also reduce it. And also trying to talk about the role of the state, because where these events are happening, the state, in one way or the other, they have insight about the event, and if the state could also collaborate effectively with the federal government in providing a state-level roadmap in addressing the issues, we are likely to observe much more improvement in the sector. And also we should be able to also maybe move towards the old glory that the sector is known for, whereby in the 60s it was contributing about 4 to 5%, while in recent times it will contribute less than 1%. This dismal performance could be attributed to illegal mining, as you observed.
Yeah, well, some people have said one way to go, I know you mentioned the state, but some people have said let's look down further and talk to the host communities. How much involvement have we gotten the host communities, you know, as part of this mining? So even when you talk about illegal mining or anything like that, are the host communities involved in it? Do they have skills, you know, that can actually allow them to mine, and then we give them the sense of ownership? Because they are the first, you know, people, the first respondents you have around the sites.
Okay, thank you very much. I think in going forward, this is one of the solutions to the mining sector, which is more about making the community people take ownership of their natural resources in terms of part ownership in equity holdings of major firms that are coming to extract at a larger scale, because the solutions to mining issues is more about attracting bigger organizations to come and extract, whereby the locals provide maybe some, along the value chain, provide value chain services within it. I think, as you observe, is take an holistic approach where local communities also are included in the ownership framework is one of the lasting solutions to it, because Nigeria is losing a lot of money to these illegal minings and that we're observing across the states.
And one of the things that host communities have complained about, especially when it comes to sand, is that it has consequences on their environment, on their homes, and it seems maybe much attention is not being given to that.
Yes, I think the sand mining issue is it's gaining prominence, maybe because of the erosion effect it created. I know in 2018, 2019, Lagos State had severe issues about it, which led to enactment of law to address the issue. And one of the ways to really address it, which the state are doing, maybe they need to do more, is through licenses whereby extracting firms in the local areas are given license. And now when they are given license, they have to do social corporate responsibility. And one of these social corporate responsibility is to ensure that the environmental degradation that is associated with sand mining is compensated for, maybe by providing good road network in the community, by ensuring that the health facilities they contribute to the development of the health facilities because of the health damage, so that when we are extracting money from them, they also be given one thing or the other. Or maybe also by developing their school system. This community social responsibility can be a way whereby the society felt the impact of what is taken from their own community. This is one of the reasons why licensing and ensure that people operating in the mining sector obtain license, because when they obtain license, they know that part of their responsibility is to take care of their host community. Thank you very much.
And then earlier you talked about government policy. How is the Nigerian Mineral Development Corporation doing? How impactful is the corporation?
I think the corporation is in the process of enactment. You know, they just passed second reading about it, and still. But the corporation holds promises. If you read the bills that was sponsored, and one of the role of the corporation is to act as an investment vehicle for the government and support the private sector, because one of the key observations in the sector is that the level of investment in the sector is considerably low. And because of the risk appetite of the sector, they tend to observe that the financial institutions are not providing necessary investment for the sector. This corporation tends to serve as a vehicle to provide funds and also to ensure that maybe geographical information about where minings are provided, because currently we understand that they are grossly available. The corporation, based on their function as stated in the bill, tends to invest extensively in ensuring that there is more information which is going to reduce the risk and also make the funders, which is the investor, understand that the mining sector is really viable and it can repay itself when funded.
And as someone
and again,
who...
also another major
Go ahead.
Another major contribution of that bill, when enacted, when established, is to ensure that, you know, we mentioned assistant and small miners, that they are the major contributors to illegal mining in Nigeria. And we observe that they contribute maybe 80% of the actors in that industry. The corporation tends to provide a cooperative structure so that they provide funding for them, so that they can upskill them and ensure that we have much more investment in the sector.
All right, so as someone who has been very active in the mining sector, especially when it comes to research and gathering of information and all that, what areas, I mean, even on this show, we've talked about the role of the host community and what you think should be done. We've talked about the challenge of smuggling, insecurity. What steps would you say that the corporation should prioritize in order to, you know, at least catch the low-hanging fruits in the mining sector?
Okay, I think, thank you very much for that question. And one of the things I think the corporation needs to really work and try to find possible solution is ensuring that the funds are really invested in areas where they are really needed, to ensure that there is maximum returns, so that the early wins serve as encouragers to investors, to ensure that, because one of the issues they're having is that investors maybe tends to have alternative places to invest their money and not seeing the mining sector as a viable place. But if at the kickstart of the corporation, they prioritize areas where they are grossly underfunded and they have huge potential for profit and also for humanitarian impact, this is going to encourage much subsequent investment, so that it will de-risk their emphasis on government funding and also increase private sector participation in the sector, because this is one of the things that is missing. And also, I would also love to use the case study of limestone as a launching pad to develop other mining sector. In mining, in limestone, we have two major actors there that is listed on the stock exchange market. And these three actors try to drive the development in the limestones. If we can attract key actors in other mining sectors, we are going to experience significant improvements in overall extraction in the country, and the dividends we are looking for in terms of job creations, export earnings, which is going to also strengthen our foreign reserves, is going to be realized.
All right, we need to thank you so much, Mr. Oludele Folari, Research Associate with Center for the Study of the Economies of Africa. Thank you so much for sharing your thoughts with us and your findings on the mining sector in Nigeria.
Thank you very much, and thank you for the opportunity.
Good to have you. So after the break, in efforts to create employment and empower Nigerians, we take a look at waste. How does that work? Join us. It's Business Morning on Channels Television. You're welcome back. Well, the Lagos State government has said that it will alleviate poverty by using waste recycling processes to create jobs. This should happen by converting waste products into consumables in a bid to ensure the socio-economic development. Nigeria, with a population exceeding 200 million, is one of the largest producers of solid waste in Africa. Although many may flee from the topic, saying it's dirty business, some brave entrepreneurs have said it is gold mine. Or someone who's been in the business of turning waste to wealth is Nina Ani, founder and chief executive officer of Avinam Links International Limited. And she joins us to tell us some of their findings and what they are doing, turning waste into jobs and money. Good morning, Nina.
Morning.
Good to have you on the show.
It's my pleasure to be here.
So I know I met you when I covered the Kirikiri biofuel, where biofuel is turned to energy. And that was really impressive. I don't know how, I mean, then the promise was that it would be circulated to other correctional centers in the country.
Yeah.
You were the one coordinating that project at that time.
Yeah.
Have we been able to spread it to other parts of the country?
Yeah, actually, 2 years back, we replicated same projects in Enugu, Gombe, and Lafia. Presently, they are using the human waste, which is creating a lot of nuisance to them, to generate cooking gas within the correctional center. So what they did at Kirikiri Maximum Security Prison, they've replicated at, Gombe, Enugu, and still there are other states they also want to replicate same projects.
So that is turning waste to energy.
Yeah.
Cooking gas, you
Cooking
said.
gas.
Yeah.
Yeah. You know, the gas you generate, the biogas you produce from waste, you can either use it to generate electricity or you can use it as cooking fuel. So it depends on what the individual, the company or the farmer or whoever that is putting this plants, what they need the energy for. So the good thing is that you can use the energy, the biogas, to run a generator, a biogas generator, or you use it as a cooking fuel in the kitchen.
And this is a win-win in a lot of situations because it's clean energy.
Yeah.
It's clean energy. You're taking care of the waste, and then you're reducing costs, and the emissions into the air. But let's also look at the job creation opportunities in this sector. What do you see as an insider?
It's really huge. It's huge. But first, businesses like this requires a lot of capital to establish in a commercial scale. What we've been doing is building for individuals. There are some farmers that will come and say, okay, I have 10,000 birds. I'm just digging pits and storing my waste. It's constituting nuisance to the farm. We want to cut down on our operational expenses. We want to manage our waste on site. So we build for individuals, they manage their waste on site. They cut down on their operational expenses, not buying diesel and petrol anymore. So, but if we have maybe a kind of a private government partnership, public-private partnership, where a commercial size plant is put in place. Of course, we'll be able to employ a lot of people, starting from waste sorting, waste preparation before you feed into the plant. And when this gas is generated, it can be compressed into cylinders. And we all know the price of gas right now. Your source of raw material is waste, always available. We can compress it into cylinder. There will be a lot of people will be employed, to run this plant, starting from the waste collection up to the point of, logistics of distributing the waste, and also, it's a win-win thing. So the value chain is really huge. It's large. People who collect waste get some stipends for waste distribution, or coming to drop it at the site where the commercial plant is. Then people who are going to run the plant, operate the plant, also earn some income working in such places. People who are going to distribute, there will be drivers. There will also be people who are already selling LPG gas, who can also be off-takers or distributors of this same gas, So there is huge employment. Employment can be created from that.
One thing you said that has caught my attention is the reduction in operational costs. That will sound good to it. This is a business show. You have a lot of business people who would be interested in that. But that would also mean, or somewhere in my mind, it tells me the overhead cost is going to be expensive. It's going to be high.
Yeah. Okay, yes, actually it's a capital-intensive project. In other parts of the country, other parts of the world, for instance, in Nepal, where this technology started from, their government subsidize, when they get farmers who are interested in building this plant, they give them a kind of subsidy to enable them, pay the rest of the money, maybe 30%. Government pay as much as 70%. The farmers pay 30% to own the plant, the system. So this way they were able to, spread it out across and help the farmers, to earn more revenue from their farm, not just from selling their animals, but also even from the waste they are producing. They are also generating additional revenue. Some of them also generate organic fertilizer, which they also use for agricultural purpose. So it's really a win-win thing. If government can come in, well, we always call government.
Exactly.
But,
government will tell you they have a lot to do.
They have a lot to do.
So can we get the private sectors to come together, get like 3 or 4 large-scale farmers, to come together and handle this?
The thing is, the project can pay back. Whatever investment you put, no matter how huge it is, the bigger the plant, the more economically viable the project is. The smaller it is, it takes longer time to recover your investment. But we have a commercial size, within 3-4 years, you have recovered your investment. So it now boils down to getting the funding, maybe to fund these farmers. Quite a number. I get like over 30 inquiries, maybe in a month. Let me not exaggerate so much, maybe about 25 inquiries in a month from different farmers who are interested in this project, including individual homes who wants to manage their kitchen waste and generate their own cooking gas from the comfort of their home.
Is the waste from a kitchen enough to...
For a home?
Yes.
It's enough to give you 2 hours of cooking gas.
Oh.
Yes, you can get 2 hours of cooking gas using 1 burner, and 1 hour of cooking gas using 2 burners in a day, using just your kitchen waste. But again, the waste that could have gone to the dump site have been diverted. We reduce the volume of organic waste going to the dump site. It will be managed from the comfort of your home, and you don't have smelly dustbins and all that. So if funding can come to private companies who are interested in this, installing such projects, the project can pay back from the gas they generate, from offsetting the expenses they would have been, or what they would have been spending on petrol, on diesel, those that are involved in crop farming, buying fertilizer, chemical fertilizer. They can use organic fertilizer from their farm, from the plant as well.
What about the maintenance of this facility? What does it require? How expensive or inexpensive? How much experts' attention does it need? Because these are some of the things that people will have to consider.
Okay, fine. That is why what we're doing is a customized system. We're not just bringing the plants they build in Germany, what they build in other parts of the world, and bring them in here to do the same thing. We look at our weather condition, customize the plant in such a way that you will require less moving parts. When you have less moving parts, you have less maintenance costs for such plants. So the maintenance for a biogas system is really minimal because there are less moving parts. And again, if we use more of local material in our production, that way it brings down you don't have to import so much, for maintenance. You practically don't need to bring in anything for maintenance. And when we build the plant, we train the owners on how to use the plant and how to maintain it. Once in a year, we, just visit the place to see if everything is okay and just do like an annual maintenance for them to keep it running. Just like what you saw at Kirikiri, it's about 6 years, it's still running because, there is that maintenance agreements that have been put in place. And, it has also empowered the inmates as well because some of them are earning salary from taking care of the plants. So that is creating job as well, even as much, right within the correctional center. They are creating job even for the inmates who are there.
So give us a fair idea. If a farmer, for instance, wants this facility to help, with all the advantages, what's the budget? An average budget,
Okay, for a home, an individual home, average budget is between 300 to 1.2 million, depending on the size. If you want it to also manage the toilet waste, about 300 to 1.5. Then for farmers, it also ranges from 1.5 million to, about 16 million. Then for those with very, medium size, so it's a different thing.
So what efforts have you done? I mean, you have a lot of ministries of agriculture who are looking for how to encourage. These days we have the challenge of power supply. Yeah. We have food security to deal with. We're looking for how to bring in more technology to the agriculture space. Have you had talks maybe with commissioners, at least if you haven't gotten to the federal yet, commissioners of agriculture, to see, or associations when it comes to the private sector of maybe rice farmers and stuff like that, to see if there's a way to...
Okay, yes, we've done, in the past, we did quite a lot. We actually started, like after my studies, I came back to Nigeria in 2007. I registered a company in 2008. So I started with the government, Lagos State government, for instance, where we built our first plant at Okoba Abattoir during Fasholas, when Fashola was the governor of Lagos State. We presented the projects, it was interesting, and they said, okay, come and build a pilot plant, let's see how it works. And from there, we can see how to manage the entire waste at the abattoir. So we did that, but, after the pilots, we showcased how it can be used for animal skin burning, for electricity generation, for cooking gas and everything. But we could not scale it up to the commercial size because the banks didn't understand the technology and they could not fund it.
So funding
is still a major issue aside technical know-how. Funding is still a major issue. Yeah.
All right, I'll have to thank you so much, and do wish that there'll be more people embracing this, because it sounds like a win-win, even though I know that the capital might be high, but you have clean energy, you have energy coming, you're dealing with the issue of waste, and of course you're creating employment, for a whole lot of people. Thank you so much, Nina Annie, founder and Chief Executive Officer of Avidam Links International Limited. Enjoy the rest of your day.
Thanks, and you too.
Yeah. Will Ebong standing by to give us a review of the market last week. I know on Mondays she likes to tell us what happened in the Forex and the value of Naira. I hope you're not going to give us anything that will make us sad this morning.
You already started it. How do I begin now? Because to say the least, the Forex Reserve, we witnessed a decline last
Major
week.
decline,
Major decline. This is
major
huge. It
one.
was $102.94 million. And now we're looking at 40.38 billion naira in our coffers. That's as of January the 19th. And that's really a big drop, especially now that the foreign U.S. and other economies are thinking about tightening and normalizing their interest rates. We're looking at how that's going to really affect our capital inflows into the country. Now, however, the Forex trading activity closed positive according to the FXDQ exchange, closed positive as total turnover of transactions carried out at the FX spot forwards and the futures market rose by 24.73% to 788.19. It's $788.19 million as at January the 21st, as Friday's close. Now, a closer look at the trading result, we saw that the FX spot, which is the I&E window, the results there, it increased by 14.04% to $601.02 million. While the FX derivatives market, we saw a 78.49% jump there, to surge by 78.49% to $187.16 million. Meanwhile, the Naira slipped at the NAFEX window, that's the Nigerian Autonomous Foreign Exchange window there. It slipped by 0.01%. That's a 2 kobo drop if you want to talk about it in Naira in terms of the money exchange. It's currently at 415 naira to $1, 63 kobo. We're hoping that we see possibly an appreciation in that, especially now that the CBN governor, the CBN is really supporting the official windows. Now we'll move on to the fixed income. We had the bond space. It's closed the mix. There was a mixed reaction there, especially for the short-dated bonds. The 2026 and the 2028 papers witnessed a mixed reaction there. There was also repricing on those maturities as well. And we saw also mixed reaction on the newly issued paper, which is the 2042 paper. And we move quickly to the fixed income, the NTB space. We saw that there was really little or no activity there, but we have Tobe Chukwu, Ikpei, who is the FX dealer at Access Bank, to tell us what really went down at the markets, in the markets rather. Good morning, Tobe.
Good morning. Thank you for having me.
Oh, it's
so
good to
at
have
the
you.
market last week.
So I'm just going to basically ask you what really happened in the market last week. We saw the Naira close negative at the against the dollar. Despite the positive turnover in the total volume of transactions, why did this happen?
So we've seen the market continue to trade on a muted note for the FX market. Rates were largely at 415/416 levels last week. As you said, turnover was up, there was positive sentiment, and as people resumed business activities, importers and exporters, so the FX deals turnover was up last week. And we saw that the CBN continues to support the market by intervening to provide funds for the foreign portfolio investors. So that's why the rates appreciated marginally to close the week at 416 from the preceding week, just an marginal appreciation of 50 kobo. So that's why we are seeing the appreciation despite the increase in turnover.
So we also saw the cautious trading in fixed income markets ahead of the central bank's policy committee meeting, which is starting today, where the issue of inflation, which is currently at 15.63%, will be looked at closely. What are your expectations, and how will this shape the fixed income space for this week?
So going to this week for the fixed income markets, we are expecting a lot of liquidity into the system this week. There's a principal repayment of about 605 billion naira for the 2022 maturity, and coupon payments will increase that to $758 billion maturing for bonds this week. There's also an NTB maturity of $129 billion this week, and the market also anticipates that the market also anticipates that there will be FARC inflow from the Federal Allocation Committee to the state government. So it's going to be a very liquid week. For the fixed income market, we expect to see various sentiments in the NTB space for the Treasury bills as market players take positions ahead of the auction, where they view rates inching up slightly from the preceding level of 5.5% for the 1 year to about 5.6. For the bond space too, these maturities of 758 billion should drive bullish sentiment in that space as market participants will look to reinvest their maturities on the run bonds, which was the 4-year reopening, as you said, 2026, and the new issue, the 2042. So So we should expect to see bullish sentiment in the bond space and maybe slightly bearish sentiment because of the NCD auction scheduled to hold on Wednesday in anticipation of higher closing rates.
Chuku, for the insights we've gotten. We're hoping that the MPC meeting, the decision that the CBN governor is going to take, and other members of the board will be able to get a clear direction of the yield going forward. So we close with what happened in the the equities market last week. It was a bullish run for the equities. We saw them at 45. They've sustained the 45,000 level last week, and we hope that we gear up to maybe 46,000. Ini, I'm hoping that that's where we're going to, hit this week.
Well,
Maybe
I have to tell you, Will, I had a great time reporting the market last week.
You did. I wish I were.
I mean, we crossed over to 45 and we stayed there and we ended at 45,900 plus. But I'm just so afraid because once the market goes up, I mean, a stock like Seplat ended about 177. I mean, it was just on a bull run, last week.
We're probably bound to see a correction happen there. And some analysts are actually saying that we might see a choppy trend this week. I hope that's not going to come to pass. No choppy trends.
Let's be real. If you were an investor, you want to take your profit. So let's just be real. Anyway, the director is shouting. Let's take a break now.
Okay.
When we come back, we'll do London. Juliana is standing by to join us there. It's Business Morning on Channels Television. You're welcome back. You're still watching Business Morning on Channels Television. Well, it seems we still have a whole lot to talk about when it comes to Brexit. A recent report is showing that some British citizens may be stranded in EU countries. Well, we have Juliana to give us the details now. Hello, Juliana. Good morning.
Good morning, Annie.
So some people are saying that their rights have been compromised, and that's despite government promises. What's this about?
Yeah, as you said, it's a pretty complex issue involving tens of thousands of British citizens that live in the EU. I believe there are about 1.2 million of them, but tens of thousands are facing issues with regards to repatriating back home. They want to be back in the UK, but thousands of them have married non-British citizens, and we know that the Home Office have promised them over several years that there is a particular piece of paperwork that they would need to fill to make sure that the issue is resolved. But alas, that's not happened. There was a group called British Rights that was defending lots of these individuals, but unfortunately, due to a lack of funding, they will be closing. So they have decided upon their departure that they will write to the British Home Office demanding that this issue is to be resolved. And it's pretty timely because today British and EU officials are going to be starting a dialogue about what happened to citizenship, not just, of course, of the million Britons that are living in the EU, but the hundreds of thousands of European citizens that have been living in Britain. There's so much fallout from Brexit, which is one of the reasons why we're having a huge issue with our labour market at the moment, because several Europeans decided to leave because their permanent status and what happens after Brexit in this country was too complicated.
Yeah, well, this issue with Brexit, the split out, like you said, is a long way from over. Well, we also have the trouble with Ukraine and Russia, and this might have effects back in the UK. Help us to connect this.
Yes, it's a really difficult issue, possibly on the brink of some sort of invasion. I think this alarm has been raised because on Friday, top Russian and US diplomats failed to broker some sort of peace agreement between Russia and Ukraine. And Dominic Raab, the deputy prime minister, spoke on Sunday, and he really was saying what all of the Western allies and NATO members are saying, that if Russia does decide to invade Ukraine, then there will be very, very harsh sanctions imposed. And we know those sanctions are likely to be economic and could cripple some very wealthy Russians that like to come to the UK. So there are suggestions that perhaps in response to that, Putin may restrict gas flows into Europe. Ordinarily, this wouldn't affect Britain that much because unlike other European countries like Germany, we rarely get our gas from Russia, but the European gas connectivity is all pretty much connected, most especially through Nord Stream 1, and we have raging wholesale prices at the moment from 51p per therm. It's now at £4.50 per therm. Skyrocketing energy bills is a huge topic of discussion in the UK at the moment, and this is going to exacerbate that. So the world is watching, but unfortunately, you know, a war so close to home does cripple down. It trickles down to the ordinary individual. So it's certainly going to be a long-running discussion in this country this week.
Yeah, obviously it's going to be. Well, we'll talk to you again in the afternoon at 1:30, and we know you have a whole lot more to tell us. Thank you so much, Julian. I'll talk to you later.
Thanks, Annie.
Let's do the crypto thing now with Laddie Williams.
Ini, yes, about your Friday prophecy. Well, it lagged the last time, but it came down really hard last Friday. We saw Bitcoin.
Yeah, I was just so angry. I was so angry that I did not hit the point that Friday, so I thought, let me make it double.
You lagged by one Friday, so but it's okay. We see the market cap there. It's lost the $2 trillion mark there. It's a $1.62 trillion, down 0.53%. Volume not so much this morning. $81.90 billion traded in the total crypto market. Bitcoin dominance there, sitting at 41.25%. Price of Bitcoin still struggling there, $35,290. It's up about 0.03, but we'll see it's actually dropped lower than this at this hour, about 34,000. Volume traded in Bitcoin, $25.46 billion. Let's talk to Olumide Additional, financial market analyst right there. Great to have you, Olumide.
Yeah, good morning, Laddie. This is a red Monday.
It's a red Monday, from a red Friday to a red Monday, Olumide. We've seen Bitcoin drop about 50% from the previous high of about $60,000. Olumide, it seems the bears are in control right now.
Exactly. And I think for listeners, especially on channels, they should not be surprised because if you recall, the outlook for the year when we started the program was that the bears were going to get grip, and that was because the narrative around interest rates, the fact that the Fed was trying to tame rising inflation, meant that liquidity will definitely tighten. But I think some of the whales got smart, sold quietly, and retail traders got between crossfires. Because if you look at what is happening right now, you see that Bitcoin broke two key support levels in a couple of hours. Bitcoin has lost more than $9,000 just in the space of 3 days. Bitcoin is trading at has posted its worst weekly performance in 8 months. The price is trading at last time we saw in August. So what this is just trying to tell you is that investors are keen to the fact that yes, the Fed body language is suggesting that interest rates will be very aggressive, so they wouldn't want to suffer more drawdowns. But I think look at the broader spectrum, you see that also Bitcoin seems to even have fair returns compared to others. Ethereum is almost twice as worse as Bitcoin. The altcoins are even getting melting like the ice cream in the sun. So I think right now it's just stay out of and watch the market, because it's not just the crypto market. U.S. stocks also suffer. We saw what happened to Netflix on Friday, and the same thing with others. So right now, investors are a bit picky and cautious. So I think for me, it's a no in the crypto market now.
And there's also that correlation between Bitcoin and the Nasdaq. You know, some traders see Bitcoin as a tech stock, apparently.
The correlation is that because most tech stocks are seen as growth stocks, and they thrive during the era of cheap spending, and the fact that people don't really look at key fundamentals like price to book ratio, EPS, and what have you. They really look more on the fact of they look at their users' growth. They look at more of the fact that they are thriving on the technology ecosystem. So the valuation often tends to not be traditional. So when the market seems to correct, you see that tech stocks, they suffer a lot. But I think if you look forward, you see that right now Bitcoin bulls are really suffering. Right now, Bitcoin has broken below $35,000. That suggests to tell you that the 30,000 support level is within sight. Any break between July 2021 support level suggests that it's going to take a miracle for Bitcoin to have the momentum it has. It is still not over yet. The US Fed is talking in some days' time, so we will see the body language is still affirming what investors think, but any change might give Bitcoin some support in the coming days.
Olumide, the question on most traders' mind now is, where is the bottom for Bitcoin?
Man, Ladi, that's a $1 million question. I think if you look at present statistics right now and look at the volume and demand and the fact that US dollar is rising, I think it would be fair to say the support would be between $25,000 and $30,000 right now, because you need to understand that the 10-year treasury you're going to that level is telling you that it's very obvious that the U.S. Fed will tighten liquidity. And also the fact that we are seeing sell-offs, the panic, geopolitical uncertainty, you see what is happening in Russia and Ukraine, that tension around is making investors nervy. So I think it's fair to say that that would be the support level in the midterm. But, the Bitcoin has often known to touch 30 and reach all-time high of $69,000. So we could see exciting fundamentals, maybe Apple, Mark Zuckerberg going into the space fully, changing narrative. But right now, it seems that the bears are holding the shot.
The bears have it right now. All right, Olumide, thank you so much.
Thank you, Raj.
All right, look at the Ethereum that's below $3,000 at $2,442. Volume trading in Ethereum about 15.34. And to see the top also market cap, it's all red with Solana there, the biggest loser at $89. It's lost the $100 mark. We see Cardano also looking to go below the $1 mark at this point, down 3.75%. So it's quite a scary market right now. Nobody knows what to do. Traders are confused right now.
No, come on, laddie, we know what to do. This is the time to get into the market. When the market is down, you get into the market.
But what if the dip keeps dipping? What do you do
then? When it's down, I guess the only way we hope it will be up. So, I mean, when we were enjoying the highs, I mean, we were all smiley and all that, and we had greed.
You should be able to enjoy some losses, right?
We had greed and extreme greed.
Exactly. So it's extreme fear now.
All right, laddie, thank you so much.
All right.
Well, that's it on the show. And like we told you at the beginning of the show, the Monetary Policy Committee of the Central Bank of Nigeria has started the first meeting for the year. As we speak, they are meeting and deciding on some of the data that would run the economy of the country. By tomorrow, we would have their decision live on Business Incorporated, so do join us then at 1:30. But of course, we'll have Business Incorporated, the normal one today, so join us at 1:30 for that update from the world of business. Thank you so much for joining us today. I'm Ini John Mekwa.